So the S&P was down 2.5% this week. You might have thought that vol was higher. Not so much. In fixed strike space, we're seeing quite a decent offer in vol. You can see here across all maturities, November, December, January, there's a bit of a sea of red there. So we're looking at the money stuff, 1.5 vol lower in November, a vol lower in December and January. And on the downside, seeing quite a lot of offers there for December downside. So this very much smells like profit taking on the put side. Whoever bought a load of protection has seen the market trade down to 4,100. There's a few big bears out there on Twitter who've been saying they're covering shorts as well. Andy Constant of Damn Spring, he was saying he was short all assets from a while back, and he just covered half of his equity short down here this week. So I do think the reason why fixed rate vol was offered is because some puts were monetized as we've come down to these fairly low levels. So some people thinking protection's done its job. I'm going to bank my protection and allow myself to get a bit longer again. So that is the price impact we are seeing in fixed strike vol on the S&P, which is why we haven't seen a massive explosion in vol this week, even though spot traded down by 2.5%. And realized vol, to be fair, is pretty much in check. Realized vol is still in the low teens, and so the carry is very positive in S&P. Another reason why the vol isn't really going to explode, right? If you're a market maker and you're short gamma in S&P, you've been able to manage that short gamma on the way down and not lose a lot of money, right? So you're not massively in need of going and buying loads of volatility back if you're short, because the short is behaving itself, okay? And then on top of that, you're thinking, well, I'm not going to rush to buy this because it's carrying itself well enough. I can manage to earn my theta and not lose money, and people are probably going to close out their puts and sell me back some vol anyway if I'm patient. And that move in fixed strike vol this week shows you that that is most likely what's going on. People are selling back some vol to the market makers. They are getting out of their shorts slowly, and everyone's getting a bit more balanced and a bit more flat, basically. Okay, so that's what fixed strike vol is telling me. I guess in a nutshell, it's not a massive panic in fixed strike vol, which makes me think we're getting close to the end of this move. And therefore, I don't think some massive crash is about to happen, right? If a massive crash was about to happen, you'd probably see these downsides much better bid than we are seeing them, okay?